So you are programmed as a kid your whole life to follow rules. Rules meaning I got to go to school. I got to get my homework done. I got to listen to my parents. I shouldn't swear. I shouldn't do this. I should do that, right? Structure is what we call it. If you drive to work, you probably drive the same way each and every single day. If you eat, when you eat your breakfast, you probably make it the same way. You brush your teeth, you probably use the same hand. We as individuals, humans, love structure. Structures are key. It's our livelihood. Without structure, we're all over the place. Our brain is programmed to identify structure. Now let's talk about the stock market. The stock market has no structure. And in the beginning, it's very appealing. Most traders are like, whoa, wait, you're telling me if I just buy here and sell here, I can make tons of money? There's absolutely nobody telling me what to do. There's nothing controlling my decisions or my behavior. It's extremely appealing. But what soon happens is we realize that same appeal that brought us to the market, that reason, that unstructured environment, is the reason why we cannot obtain consistent results. So I'm going to help you develop structure in the market. You need structure. Think about it. Do you want to be thinking and overthinking price action and trying to predict all these crazy movements? Absolutely not. You want a simple 3-step approach that all you have to do is identify and execute. And if you can actually do that, you can obtain results that you're proud of, that make you feel good, right? And you don't have to worry about what's going to happen tomorrow. All you have to worry about is identifying your strategy. This is what we offer over here at High Performance Trader. And if you click that link below, you can get it for about 5 minutes, completely free. All you have to do is click that link and it's going to bring you to my website. Now, this website has a 5-minute document breaking down the strategy. This is the document we're going to go over today. But guys, come down below, punch your first, your last name, your email, and I will send you a free mini course on this strategy. And not just that, I will send you weekly data reports on our setup every single week directly to your email. Now, this helps solidify that confidence in the approach. We're currently sitting at an 82, I think it's about an 82% win ratio. I just posted it in our Discord. Let's see. And this is what I do for my Discord team. This is what I do. And honestly, guys, I do it for myself. Because without the confidence, without the understanding of the strategy, right? How am I supposed to execute appropriately each and every single day? This is what I send out weekly right here. These are our high level summaries, right? You come here and yeah, currently we are sitting at a 82% win ratio. And this is over the last 1, 2, 3, 4, 5, 6, 7. We're on our 8th month, right? So guys, come down, click the link below. You will get the high level summary that fleshes out every trade that we take, what's good about it, what's bad about it, right? Because guys, we need that structure. Without that structure, we are just trading in and out of the market with ignorance and just massive amounts of irrational emotion that causes us to consistently lose money and just build that horrible relationship with ourselves in the stock market, right? So let's break down the trade and let's break down how our edge helped us identify it. So step number 1 is identify the critical level. Critical level is the easiest level you're ever going to identify. It's a repeatable price point that's significant because of its volume. Open print. This is the 9:30 bell price. Open print. Very easy. Oh, it's 9:30? Immediately, what's the open of that candle? That is open print. Now, why do we watch the open? Because the volume. Why is volume important? Because where the volume is where the banks are. We can't move the market. The banks do. So we have to spot what the banks are doing and then act accordingly, right? So number 1, identify the open. Number 2, identify the crossover. Why? Well, the market's, once again, extremely unstructured. And these banks are just constantly eating up and spitting out retail traders. You need a strategy that keeps you on the sideline until your edge presents itself. This is why moving averages are so important. I utilize this approach on a 5-minute time frame, and it keeps me from trading chop constantly. The market has been extremely choppy, going up, down, left, right, all over the place, crazy amounts of volume, and traders are they're literally getting killed. But traders on my team, they're staying sideline. They're patient. They're waiting for the edge to properly present itself and then act. So number 2, identify the crossover. This is when the EMA cloud turns from red to green or green to red. It's very simple visual, but very effective. Number 3, most important part. Identify the RBI, GBI. Josh, why is this so important? Well, you have two jobs as a day trader. That's it. Number 1, identify opportunity. Opportunity is what you look for to make money. Number 2 is manage your capital. It's the most important part as a day trader. Now, the only way to effectively, in my opinion, manage capital is by utilizing the RBI, GBI entry criteria. This is a red bar ignored or a green bar ignored. On the 5-minute time frame, you can do it on other time frames, but I use it on the 5-minute, and it keeps me extremely aware of who's in control and where my stop loss needs to go. See, if I want to effectively and consistently make money in this game, I need a simple system to manage risk. Risk is key, critical, crucial for us to actually, trade without fear, right? Because I've identified where my stop loss is going. Number 2, effectively abide by it, right? Because I put my stop loss in, I need to logically understand, hey, I'm in this long right here. My stop's going directly below the candle that was ignored, because that's the only place it needs to go, right? If price falls below the level that I got in, there's no reason for me to stay in. The bullish structure couldn't hold, therefore I'm out of the trade, right? Very simple. Once again, guys, open print, no moving average cross, so no short play. And I get it. What do you mean no short play? Josh, you're gonna miss plays, but you're gonna become consistent. It's the price, right? Learn to let go. There's no short play for me to this downside. None, because there was no moving average cross. We get the moving average cross, and now we get the red bar ignored. I'm in long, stop below it. Now notice here, I always draw a box directly around the candle that was ignored. This is my zone. This is my area of value. This is the level that needs to hold for me to stay in the trade. And notice, guys, it held. I don't care how it held, but it held. Therefore, the RBI was extremely effective and gave us that kept us grounded throughout the whole trade, building that structure. And then you follow the cloud up into your target, right? So guys, once again, this was just another example of our approach. And you come over to High Performance Trader, guys, this is all the data I have on this approach, right? Because guys, if you want to become a confident trader in the market, the only way you're ever going to do that is by studying the approach. So come down, hit the link below, get these emailed to you directly so that you guys can build that confidence, right? It's nobody's going to do this for you. You need to develop a relationship with the market that's actually profitable, that you actually enjoy, and you need to be able to respect it, and you need to be able to respect yourself. The only way you're ever going to do that is by earning it. So click that link below, start your journey of earning that self-respect. I'm Joshua Salvetti. Make sure you hit a like, subscribe, send this to somebody that needs it. I love you guys, and be ready, because tomorrow we're breaking down week 3 of April 2025. I'll see you in the next lesson.